Well, hello there. If you're a passive investor interested in multifamily syndications, you might be wondering how in the world and under what circumstances can we do a refinance? When is that possible and how does that work? So if you're wondering that, to help us kind of explore this topic further is Bronson Hill, our Director of Investor Relations. Bronson, how's it going today?
Hey, Michael, excited to be here with you and with our whole audience. The question that comes up and that we're talking about today, like you said, is a refinance. What does it look like when a syndication is refinanced? Can you talk about that and how that's possible within a syndication?
Yeah, this is the favorite strategy really is the one where we buy a property, a value add deal, and we're able to renovate the property, improve the property, raise the income of the property, the NOI, net operating income, and thereby by doing so, obviously increasing the valuation of that property. So let me show you an example here. This is 275 units that we did recently in Huntsville, purchased for $18 million, putting in roughly a $4 million renovation budget, which is quite a bit. And the NOI when we bought it is about $1 million per year. Now, let's say we do all this work and we're able to raise the rents, and you can see here, let's say that instead of $1 million in NOI in 18 months, we're able to increase the NOI to 1.5 million, right? And actually our target's a little higher than that, but let's say it's just 1.5. So if you can go down here, you can see that the valuation now becomes at a cap rate of 6%. It's now worth 25 million. Now we bought it for 18. We put in 4 renovations, so we're into it roughly 22. So we created about $3 million of value here. And now we're at the point now where we can say this has stabilized, meaning that we have achieved our target rents and the value add effort has essentially stopped. So what we can do is we can refinance. So we can refinance this thing, and as you can see, by refinancing through the new loan proceeds, we're paying off the previous loan, of course, but we're also able to return part of the capital that was invested by the investor. So in this particular example, we're returning 51% of the investor's capital. Right now, if the NOI were a little higher, let's say it's 1.7, okay, now you can see that we're returning 89% of the investor's capital, right? And so the more we do that, the less the more the risk is gone from the investor. Like, this is great, I have my money back, right? Do whatever you want, hold it forever, because you still get the investors still get in distributions there, and now they can take that money they got back and reinvest it in another deal and get another return on that money. So you're essentially getting double return on the money. And so this is really our favorite model, is being able to add value and then return either part or all of the capital back to the investors. And of course, they're ecstatic, and we hope that they would invest with us again. And again, the beauty of it is that they can get another return on that money. For example, we have this passive income calculator, Bronson, that's available for download. But if you, for example, in this example, if you're investing, let's say $50,000 per year passively in syndications, and you assume that each property refinances after 2 years and you get an average of 50% of your capital back. Now, typically when we do a refinance, we're shooting for 70% and above, but not every property refinances. So this is a good model here. But if you look at this, you can see quickly in year 5 that your cash on cash return goes from 7 to 9% in the first several years. Once we start refinancing and you're getting that money back and you're reinvesting it, you're getting a double return. So starting in year 5, your cash on cash return goes to 20, 25, 30%. And that is really the amazing compounding effect of reinvesting in multifamily and value add multifamily specifically because of that value add component.
That's awesome, Michael. I think it is very powerful. I mean, I think one misconception that comes up when I'm on calls with investors is they think that somehow when a refinance happens, they're going to be bought out or they get their money back, and so now they're no longer in a deal. But we love that, it really actually is kind of the opposite, where people get their money back, they can actually reinvest it, they can go to other deals. And actually at Nighthawk, we've actually been able to do that about 50% of the time, where our deals we've had for a couple of years. So it's something obviously we'd like to be able to do every time, but it doesn't always work out that way. That's something we'd like to. But can you talk for?
Yeah, I mean, typically you're right. 50%, the other 50% we're selling, right? We're just literally selling outright. It's because we tend to do value add deals. The valuation is always higher. The only question is, how do we exit? Does it make sense to sell outright, or does it make sense to refinance? And a lot of that really depends on the numbers and also the market. Do we like the market? Do we like the longevity of the market? Do we like the deal itself? For example, right now we're exiting some of our earlier deals, some of our smaller deals, and we just don't love the smaller deals, right? We think they're they're a little bit riskier, and the larger ones are more interesting as well. And so the longevity and the outlook for those are much better for a refinance. Something we'd love to hold, for 10 years plus once we refinance. So that's our favorite strategy.
That's awesome, Michael. Can you talk for a minute about the passive income calculator that you were showing a little bit earlier there?
Yeah, I was showing the passive income calculator. You can download this, by the way, at themichaelblank.com/PIC. That's P as in Paul for passive income calculator. And you can just tinker around with that thing and make your own assumptions. I'm investing this much every single year for this many years. I'm going to assume refinance like this, and you can very quickly see what is your cash flow and what is your net worth. And it's amazing to see even small numbers. I use $50,000 per year. There's investors who are investing far greater than that as well. And it's just a great little tool that you can use to forecast or project what you might be able to make by investing in multifamily syndication. So that is at themichaelblank.com/PIC for passive income calculator.
Awesome, Michael. Well, thanks so much. This has been really valuable, I think, for all of our investors. I learned a couple things on this as well. Wanted to just speak to our audience for a minute and just, if you're watching this and you're interested in getting involved in multifamily syndication, we are actually also operators. We do deals like we mentioned, Michael was sharing. So we have something called the Nighthawk Investment Club. And it's basically our group, our passive investing company, where we allow passive investors to be a part of our deals. So if you're interested in being a part of that, or just at least seeing what deals we have available, please go to nighthawkequity.com and click the join button. We'll set up a call and start a relationship with you, be able to let you know about upcoming deals. Thanks for educating yourself. We'll look forward to seeing you on the next video.